Hi everyone, welcome to today's video. Today I'm going to show you how you can profit from a falling market, especially if it's in a bear market. If you have been living under a rock, you know the crypto price have been crashing down like absolutely crazy. Now most people, if your strategy is to buy and hold and wait for a price increase, then you are the one that's going to be paying people like me who are actually getting involved and actually doing this type of trading. So today I'm going to show you how you can short and long the market. At this time, I wouldn't recommend you take any leverage to do this. You can just do this with money you have. But also keep in mind, if these are money you're going to need, I wouldn't recommend you go ahead. But I'm just a guy on the internet. I'm not your financial advisor, so don't listen to me. I'm just showing you a technical analysis strategy that you can use to actually implement this and make possibly $1,000 a day, if not more. You can even do this an hour, depending on how good your skills are. So with that in mind, I'm going to get started and show you this. Please, 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 do me a favor, subscribe and watch this video till the end. Otherwise, you could lose a lot of money if you don't apply all these things. So the first step is to go to tradingview.com and we're gonna go down to BTC/US. You don't need to add in all the things, so you can see it's going down. Now this strategy works best in a falling market, and we know it's a falling market because there's a lot of fear in the marketplace and there are all these things going on. So that's kind of sentimental analysis right there. And then we want to apply technical analysis. If you don't know technical analysis, that's okay. That's why you are watching this video, and I'm actually going to show you step by step and make it super easy so you actually know how to do this at home. Now the first indicator we are going to use is called the stochastic oscillator. You can just search this up. I have this favorited so you can see. Now, the stochastic oscillator really helpful because it actually allows us to determine the momentum of how the market is going, so we can make profit in both directions. In a falling market, I wouldn't recommend you go for a long position or a short when things are up high. So what this means is, if we look at this chart, you can sort the time that you are in. So if I sort it by 1 minute and we do this, you can see there's a pattern of two lines here, so one at the top, one at the bottom. Now there is also two lines here, and you can see as soon as these two lines fall under and there's a crossing, so this one is a dead zone, so we don't want to do any trades here. But as soon as you can see, there's good confirmations that there's a trend reversal happening. The price shoots up, and as soon as it goes above this line, and it starts dropping down again. So these are good times to get in, especially if you're selecting markets when the price action is like this. So points like this is a good position to get in, but this strategy is not foolproof, so we actually need to add in more indicators to determine when is a good time to actually get in. So the next indicator I'm going to be showing you, and this is called MA cross, and this actually shows the moving average of two cryptocurrencies, and the MA cross will actually show you, it will point out in here. This is usually indicating when there is going to be a trend reversal happening. Now, because we are potentially going into a bear market, if not one already, I think we are. Usually, when you see a cross, it means that it's gonna price is gonna start declining. So this is when you would want to create a short order somewhere like Bybit or Kucoin or FTX or Binance, whatever you like to use. So this is usually when you see stuff like this is a good time to short the market. Now I wouldn't really actually put an so this is where when they're crossing, and you can see the price is starting to decline. So this is the confirmation the price has dropped. So somewhere along here we can start actually creating a short order, for example, using something like this. And what the shorting means, you basically borrow funds from an exchange and you sell it, and you keep the money, and when the price drops you buy it back again and give it to them and make a profit. That's what shorting really means. So with this strategy, you really want to stick to shorting. You don't want to buy something here because it is a little bit riskier, and this is because the price could crash. The other way, if you did buy it here, one of the thing you would do is you would wait, or you would get out whichever the timeline is. So if you're 1 minute here, so if you, so this is a 1 minute chart, you would set it up so in 3 minutes it would get you would get out. So you'd go get in here and get out after 3 candles. And it's the same with whichever time zone time. If you set it, if you set it in here and you get in here, you would get out after 3 candles if the price is going up. And this is because you're in a, if you're in a bear market, or it's more likely the prices are going down. So I wouldn't stick here till long for the price to go down. I'll just get out after, you know, with 3 to 5 times of duration of whatever this is. I wouldn't recommend you keep this on for days. Usually you want to stick to about 30 minutes, 45 minutes. If you go with a 4 hour chat, this actually gives you more data to work with. So this will be more accurate. And the final one we are going to use is called we're actually going to be using the Ichimoku Cloud. And what Ichimoku Cloud allows us to do is actually allows us to find the support and resistance level of different cryptocurrencies. Now, usually when we are writing it down, we want to be under this cloud. So what I'm going to do, if you look at the Ichimoku cloud and you want to turn the lagging line off, we don't really need this one, just to personal preference. But in here, the other strategy you should combine is when the candlesticks are inside this cloud, this is a no trend zone, no matter what's happening with the other two strategy. So even if there's a cross right here and the candle is inside this cloud, that's basically a no trend zone. You also want to look at where the candles are. If the candles are below the cloud, this is a good time to start shorting, because the chances are prices are going to go down. So to summarize, there's 3 strategies. The first one we look at is stochastic oscillator. This shows us when is a good time to get in and get out, because we can ride the momentum. Never trade against the market. If the market is falling, you should follow that trend. That means if the market is falling, you need to start shorting, because that's how money is going to flow to you from the ones that aren't. And is the opposite as well. If the cloud here, so you can see the cloud is here, and if you start seeing the charts are above the cloud, that means you can start longing as well. I wouldn't long, especially for a long time in a falling market. This is because we don't know how the overall market is going to respond to this. If the things are also in the cloud, don't do that trade, no matter what's happening here. The crosses actually indicate when is a good time to short things, because it's going to indicate a trend reversal, and you can judge this based on where the cloud is as well. So that's pretty much the strategy, guys, and 3 indicators. I hope you found this very helpful. These 3 technical indicators really help in judging when to position yourself. Usually falling market, you want to short. Once again, be careful when you get in at these positions. I would say set up a timer to get out after in certain duration, because the reversals do come, and they come suddenly. So that is all for this video. If you enjoyed this, if you learned something new, make sure to subscribe for more content like this. I'm looking forward to seeing you all in my next video. Thanks for watching. Subscribe. Bye.